Hello and welcome to this week's MarketSmith Market View. Today, we'll walk through the key market trends, explore which sectors are holding up well, and look at some stocks building noteworthy patterns. The aim is to break down what the market is telling us and how investors can respond thoughtfully. Let's get started. Since 18th July, the Nifty 50 has been in an uptrend under pressure, a phase where the market remains in an uptrend but shows signs of strain. If distribution days continue to rise, or if the index slips below its 100 or 200 DMA, the market status could shift to a downtrend. The Nifty 50 started last week on a strong note, forming 8 consecutive bullish candles. It also reclaimed both its 50-day moving average and the psychological 25,000 level, signaling a constructive near-term trend. On the upside, resistance lies between 25,150 and 25,300. A decisive close above this zone could open the path toward 25,500 to 25,800. On the downside, support is placed at 24,800 to 24,750, and a break below that could trigger selling pressure toward 24,600 to 24,500. In short, the index looks constructive, but sustained trade above the 25,150 to 25,300 zone will be critical to confirm the next upward leg. Nifty Auto is still leading the charge, showing strong momentum and clear sector leadership. Metals remain solid too, holding in a confirmed uptrend. We are also seeing consumer-focused sectors like FMCG, consumer durables, and even pharma picking up strength, which points to steady institutional buying. On the flip side, IT, realty, energy, and media continue to lag, trading below key averages. So overall, leadership is broadening, and with auto at the forefront, it's giving the market an encouraging base for its uptrend. Here are a few stocks worth studying this week. Dr. Lal Path Labs has a strong earnings history with consistent EPS growth. The stock is consolidating near the 50 DMA and is forming a cup-with-handle base pattern. Dixon Technologies is forming a consolidation base and is currently 6% below its pivot level. It holds a strong EPS rank of 98, a buyer demand rating of A, and its RS line is trending upward with an RS rating of 85. Bajaj Finance has broken out of a flat base pattern. With an EPS rank of 91, a buyer demand rating of B+, and a strengthening RS line, it presents an attractive setup for investors. Astra Microwave Products is a manufacturer of microwave components and systems for defense, aerospace, and communication applications with a strong EPS rating of 95 and an RS rating of 78. Trading 6% below the pivot, with a breakout potential. Affle3i Limited is a global company with a proprietary consumer intelligence platform with a strong EPS rating of 89 and an RS rating of 84. Trading near a pivot at Rs 2,080 with a breakout potential. Keynes Technology India has a strong earnings momentum and is trading around its pivot price range of Rs 6,835 to 7,177. So, how should investors think about the current market? You just have to follow these guidelines. 1. Keep exposure light until the market shows clearer strength. 2. Focus only on stocks with both strong fundamentals and constructive technical setups. 3. Avoid chasing extended stocks. Instead, wait for proper entries backed by volume. Above all, patience is key. Let the market confirm before making new commitments. That wraps up this week's MarketSmith Market View. Remember, the goal isn't just about spotting opportunities, it's about building the discipline to study market behavior, track sector trends, and analyze stock setups systematically. Thanks for watching, and see you in the next update. Information contained herein is not and should not be construed as an offer, solicitation, or recommendation to buy or sell securities. It is for educational purposes only. For more information, see our legal disclosure.